And just like that, ladies and gentlemen, Instacart stock has gone public and the stock's up 30% right now. Unbelievable, up over $9. And the company, the parent company, is called Maple Bear Inc. You guys can see, and the ticker symbol is CART. So we're going to break down some numbers. We're going to go over the charts. I mean, guys, we just started trading, so there's not much to break down here, but we're still going to break it down. So if y'all find value, hit the like button, make sure to subscribe, and of course, don't forget to get up to 16 stocks from Moomoo, each up to $2,000. Use that link down below. We'll talk more about that later. And with that being said, cheers. Let's dive into it. So like I said, man, this is nuts. Instacart stock, again, ticker symbol CART, it is up over 31% right now, up $9.50. And the crazy thing is, guys, it was at, I believe, what, 43 bucks earlier. So it was up even more. At one point, it was up, let's see, about 8%. Or about 8% higher from where we are now. So we were up 40% at one point when, the stock first started trading, which is just nutty at this point, guys. And this is after we had another big company go public last week, I believe, ARM Holdings, which we covered, I believe, again yesterday. We also mentioned it, of course, last week, but we did a recap yesterday. And this one's down about 4.5% on a side note here. And this goes to show, which I covered in my video yesterday, I'm not a big fan of buying stocks that just IPO, literally when they IPO, the day of, because a lot of the time with a lot of companies that I've looked at least, maybe I'm missing something here, but when these stocks initially go IPO, there's usually a big drop before there's any signs of a rebound, and who knows how long that drop could last. I mean, you guys can see here on ARM Holdings, it shot up from 55 to 70 the day of the IPO, the day after, and now it's at 53 bucks. It's actually down not 40%, 4.5%. 40% would be nuts, guys. 4.5% down on the day right now, and we're down overall about 22% from the highs. So Instacart, sure, there's a lot of hype around it right now today. It, just went public. It's up 30%, but do not be surprised if this stock started to bleed out a little bit over the next couple of days, next couple of weeks. Who knows? I mean, I'm just saying, based on the companies we talked about yesterday, there's a lot of other companies that went IPO and their stocks got hit. I'm just saying, be very careful. Let me actually see what the market cap is. I think it's 10 billion. Let me double check though. Let's see here, guys. It's not even showing on Yahoo Finance, but I think they went public at about 10 billion market cap. Let's actually pull up this article on CNBC. Give me a second here, guys. By the way, if you're finding value, hit that like button. Make sure to subscribe. It's free. I appreciate you all as always. So this article is from CNBC. You can see here, Instacart prices IPO at 30 bucks a share. So you guys saw it went to 42. Valuing the grocery delivery company at about $10 billion, which you guys think that's overvalued? I'm not sure. Let's dig a little bit deeper. Let's see how much money this company is actually making, if they even have it here, guys. So it looks like here, yada, 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 they're going public at $30. We get that. IPO, all right. Top end, 28 to 30 bucks. That's awesome. Beautiful. Let's see here. The 11-year-old company, which delivers groceries from chains including Kroger, Costco, Wegmans, have to drop its stock price dramatically to make it appealing for public market investors. So keep in mind, guys, this is what I was talking about in my last Instacart video. I forget when I made that, but I talked to you guys about how I think they're way too late to the game. If they went public 2 years ago, they would have been valued 3-4 times higher than what they're valued right now, which is $10 billion. I mean, look at this, guys. In early 2021, did I not say this? At the height of the CV pandemic, right? Instacart raised money at $39 billion, at a $39 billion valuation, or $125 a share, from prominent venture firms like Sequoia Capital and Andreessen Horowitz, and along with big asset managers, Fidelity, T. Rowe Price. I mean, guys, 40 billion versus 10 billion. Their timing was way off. I'm not sure why they didn't go public. Let's see here. Looks like here the tech IPO market has been largely shuttered since December 2021. That's for sure, as inflationary pressures and rising interest rates push investors out of risk and led to the plunge in the prices of internet and software stocks, no doubt. So that I guess they missed the window back then. They waited through 2022, and here we are in 2023, pretty much nearing the end, and now's when they decided to go public. So it's all a timing thing. All I'm saying is, they were better off for sure going public back in 2021. It is what it is. Time goes on, and here we are, guys. They're going public right now. And Instacart has sacrificed growth for profitability, proving in the process that its business model can generate earnings. Revenue has increased 15% in the second quarter to $715 or $16 million, down from the growth of 40% in the year prior, and about 600%, which is nuts, in the early month of the pandemic. Of course, for obvious reasons. People are locked in their house. They're not going to go grocery shopping. What are they going to do? They're going to use a service like Instacart, and then boom, sales ended up going through the roof. And let's do some math here, right? The company's now valued at $10 billion, right? They just did $716 million in the prior quarter, right? So let's multiply that by 4. What's 716 by 4? Let me see that now, times 4. So that's what? $2.8 billion of revenue. Think about the valuation here, guys. Let's say $10 billion market cap, $2.8 billion revenue for the trailing 12 months. I'm not sure if that's exactly what it is, but taking that 716 times 4, that price of sales is about a 4, which is not that bad. I'm sure it's not as low as some value investors would want to see it, but it's not that bad. And arguably, well, not even arguably, for sure, if they went public in 2021, that price of sales would have been jacked up way, way more. You guys know what I mean, right? Probably like a 10, 12, whatever it would have been. So the valuation now is more attractive than it would have been in 2021, but I'm looking at it from the standpoint of the company to try and, gain as much money as possible or grab as much money as possible. Them going public would have been way better in 2021 for the company, not necessarily for the investors. I think the investors are better off with them going public now. The valuation is more attractive than it would have been. If they went public at a $40 billion market cap, that would have been nuts. But yeah, $716 million is the revenue for the last quarter, up 15%, not bad year over year. And let's see, Instacart started generating earnings in the second quarter of 2022, and in the last quarter, or latest quarter, reported at $114 million in net income, up from $8 million a year prior. So it looks like this is interesting. It looks like they're prioritizing, the bottom line, getting, solid earnings. Maybe they want some big institutional investors to come in. I don't know. But that then leads to them maybe not focusing much on growth. Maybe that means for price of sales, maybe that's too high if they're not going to be growing as much and they're focusing more on the bottom line. I don't know. I don't know what the trajectory is of this company, but okay, look at this. At $10 billion, I didn't even read this till now, Instacart will be valued at 3.5 times annual revenue. Pretty much what we just said, right? 4 times, 3.5, whatever. My math was off a little bit, but, that's not that bad. And there goes Siri. But again, that's not as high as it would have been back in 2021. And DoorDash's revenue in the last quarter grew at 33%. And it looks like DoorDash's price of sales is a 4.25. So that might be a better deal considering how fast DoorDash, or how much faster DoorDash is growing as opposed to Instacart there. So this is going to be interesting, guys, for sure. DoorDash versus Instacart. Although I think DoorDash does do, of course, their food delivery. Obviously, Instacart, I don't know if they're doing food delivery. I mean, yes, they're doing grocery delivery. It's still food, but you guys know what I mean. But I do know, I think DoorDash is now slowly transitioning a little bit into grocery delivery. They're inching their way into that space. And of course, there's other competitors. But this is going to be interesting, guys. If you're looking at a growth play, based on the numbers we just talked about, DoorDash is probably better. I mean, based on the growth that we've been seeing. But Instacart, with, the rise in their net income, earnings on the up and up, at least for now, this could open up a better value investment potentially, especially if the stock comes down substantially, which I think it needs to come down substantially, guys, to be honest. I think Instacart, even at a 4 price of sales or 3.5, whatever it is, that's got to come down to like a 2.5. Maybe we do get more selling, as I've said before, after stocks IPO. There's a lot of the time there is selling, and it's only the first day, guys. So maybe we do get more downside. I don't know. We'll see. But as of now, guys, I'm staying away from Instacart. I'm watching it, but not buying it yet. And of course, I'll keep you guys updated and make sure what I'm doing, what I'm up to, all that good stuff. So with that being said, if you guys found value, hit the like button, make sure to subscribe. Don't forget to get up to 16 stocks for Moomoo as well, guys. Use that link down below, or just go to StockSurfest.com/Moomoo. Once you guys open up your account and fund it with at least $100, you get 5 stocks right off the bat, and fund it with at least $1,000, you get 10 more stocks, totaling 15 stocks. And mind you, each of those could be valued up to $2,000. And for a limited time, if you guys fund your account at least $5,000 on top of those 15 stocks, you also get a free share of either Tesla stock or Google stock, which makes this promo an absolute no-brainer. So if you guys want some free money and you want to help out the channel, because that is an affiliate link, full disclosure, use that Moomoo link down below. And with that being said, cheers. I'll catch you guys later.